we want to make sure that we can speak to PMs and operational staff at our will. Putting all together, we all obviously start with hedge fund research from top down, bottom up, manager selection, optimizations, and we come with the Asian fund of hedge funds. I'll give my microphone to John.
Yeah. First of all, I want to just take briefly and thank Krista and their team for having me, because it's kind of special here because only grew up blocks from here in Santo Amaro, so it's nice to be back, being like home, you know. In my discussion, I thought I'd keep it brief and give my real experiences of my feelings about some contrasts I have between Brazil and China from a direct investment perspective. And the two areas I want to break up my talk into is one is the real estate market, which I think is a very special asset sector for the BRICS, and especially the China and Brazil. And two, the other relevant part, which I am involved with, deals with the sources of burgeoning pools of capital from Asia, and to give you a perspective of the new capital sources that are moving into alternative assets. Now, real estate is a very complicated asset class, and if you strip the various types of real estate and you do a contrast, in China, for example, which I spent a lot of time investing in and looking at transactions, China is a very opaque market, driven by their own rules and standards and yields. It's like they swim in their own little fishbowl, okay, irregardless of what those international investor needs are. Therefore, these prices are driven up by valuation methods that are uncomparable to anything we see in Western countries. So that's a very dangerous thing, which will implode at some point. But having said that, you know, the urbanization is so powerful that with 5 trillion of savings in the pockets of consumers, they either buy in the Shanghai market or they buy real estate, and that's their only, you know, channel for investment. So that's driven up every sector in from retail to residential. Now you contrast that with Brazil, and I like Brazil because the returns here are driven by pure equity. You don't have the financing you have in China, which, as you know, the top 4 or 5 banks are Chinese banks, and they are gushing with cash, funding property. In fact, what's dangerous about China is if you look at the GDP growth, whatever it might be, 7-8%, 60% of that growth is not driven by export. It's not driven by consumption. Consumption may be only 30% of that. The 60% is driven by construction, just building homes, building bridges, and so forth. And that can't be sustainable. And that's why it is fueling all this need for iron ore, steel, and to bring to China. The other part is Brazil return, I think, has a lot of tailwind. Tailwind's really important in my business because when liquidity rushes in, that's your best friend, because I've been in places like Vietnam when the liquidity leaves the market, investors are stranded for years. And I don't believe that's true here in Brazil, not at least for the next 4 or 5 years, which is a very positive sign. Therefore, we're quite bullish on this market also because the rental rates here are very high compared to China. Take, for example, if you build a shopping mall in a primary or second-tier cities, from the time you buy the land till you achieve an 8 cap rate, it could take you 5 years. All right, it takes almost 2.5 years just simply to break even on the interest and operations. Here in Brazil, it's a much more positive. You can see from the room rate at your hotel to the industrial buildings to the office rents are much, much higher and doesn't resemble in emerging markets. With that said, this place has many bubbles, okay? Faria Lima, where land is trading at almost 50% of your cost to acquire. That's almost like Tokyo prices. And it should not be so high, and it's going to adjust at some point. But having said that, you know, other markets outside of São Paulo in second-tier cities has more room for like budget hotels and other things that we're looking to invest into. All right, jumping on sources of capital. Here's a statistic that's really important. In 2007, the top 200 asset management companies in Asia, excluding Japan, these are banks, insurance companies, pension funds, and others, had about $7.4 trillion. Okay, in a matter of 3 years, in 2010, that number swelled to 14.6 trillion. That doubled. And it's what was said before. It's really, they are creditors and the West become debtors. And that shift that occurred in 2008, you've never seen again because that shift of wealth is clearly going to the East. Now, a lot of guys who I meet here who are long, short, some different type of asset management have gone to Asia with a greater or lesser, probably lesser degree of success in raising money. I think if you look at the places where a lot of this capital is coming out of, for example, in Korea, the big pension funds like KICs or NPS are not investing in these type of funds. But you really got to look at the channels through their fund managers like Samsung or the Hyundais or the Hana Financials to help you bring a structured product that gives almost like a fixed income appearance with the brand name. That's what sells. Otherwise, you may end up going to Seoul and wasting a lot of time climbing the wrong tree because they're very highly risk sensitive. China, the same way, because these are really dominated by the very large wealth funds and CICs, Social Security, and so forth, and they're not allowed to invest overseas as yet. Hong Kong and Singapore, you have pockets of high net worth. There are coming into these boutique funds, long, short, into Brazil. But even Japan, as you may know, about $16 billion has already been invested through the trust banks via Itaú BBA in a structured product of bonds by Petrobras, for example, that gives them a very low yield, but they're very happy. All right. I think I want to kind of leave off at this juncture just to see if there's additional inputs that.
Well, we could perhaps open a Q&A right now.
Thank you. Thank you both for your comments. Greg Maddox from Wells Fargo. Question is accessing the market. So in Brazil, the IOF tax at least allows foreign capital to access the equity markets, the bond markets, et cetera. My assumption is that accessing direct capital markets, either fixed income or equities in China in particular, is extremely difficult for foreigners. Can you talk a little bit about how your strategy goes about getting access to that and what things we ought to be considering in trying to set up a business to do that as well?
Okay, we are hedge fund specialists, so when we came to Brazil, we're not interested to invest in funds that are in real. So we're just looking at US dollars, simple as that. So we are not experts on renminbi. We are not currency hedge specialists. We do not structure anything. All we do is looking for the best manager in the best possible environment. We do thorough due diligence, investment due diligence, quantitative due diligence, and operational due diligence. We are well recognized. We are well recognizant of the fact that global macro is driving the process these days. So we look at the business cycles. Once we identify a business cycle for the next 3 to 9 months, then we decide whether we should be looking for long-short manager in Asia or vol arbitrage manager or fixed income manager. But I completely understand your question, but I will not be the best person to answer that. Perhaps John can add something.
Yeah, we're all in the private market transactions. I fully understand your question, and that's not what we're transacting offshore entities, to get into a market, and that's where we stop.
I could add, Hong Kong is right now the capital of Greater China, but with this renminbi process that is taking place, that the currency will actually become an official foreign currency that people can actually buy in New York and London. The capital of Greater China will become Shanghai. So we're in that process, but we're not there yet, maybe in 3 to 4 years. Anyone else? Okay, thank you very much.